Hello, everyone, and welcome back to the show. This is episode number 2 of my series where I want to invest 1,000 euros per week. And I'm just now logging into my broker account, and let's check out where things stand. You see here my portfolio is at 983 euros. So now I want to buy my 1,000 euros, but I want to buy a little bit more. For those who have seen the first episode, I had some trouble. I uploaded 1,000 euros and I wanted to buy 1,000 euros, but it didn't let me. And the reason was probably that there is a trading fee of €1 and that there is a bid-ask spread. So the increased volatility in the market meant that I couldn't buy what I wanted. So the 1,000 didn't work, the 999 didn't work, the 998 didn't work. So I just settled for 990 euros. That means I want to buy 1,010 this week to make up for it, and so that our total invested amount after week 2 is at 2,000. All right. So let's check this out. This is the ETF that I'm investing in, the MSCI Emerging Markets. It's down pretty significantly today, which as a long-time investor, I have no problem with that. And yeah, I actually prefer that it goes down a little bit while I'm building the position, and then over time it grows. So yeah, you see that here I have a little bit more available in my balance. It's about 1,100. So I transferred 1,100 euros this week because I wanted to have a little bit of a safety buffer so I can cover the spreads and the transaction costs for at least the foreseeable future. Okay, but still I want to buy just on average the 1,000 per week. So without further ado, let's go ahead and place the order. And I am placing the order of 1,010 euros. Let's review that. Market price 44. Okay, good. Buy now, order placed, and done, I hope at least. So let me just refresh here, and perfect. It's already executed, and I have upgraded my position here to almost 2,000. So I'm down already a little bit performance-wise. I'm down 10 euros, no big deal. But yeah, this is where we stand. We have a little bit of money available. But yeah, we're on track. And now let's see what that means for my overall portfolio. I go in the Wealth tab, and you see here again, the portfolio is at close to 2,000, down 12 euros. So yeah, that's it. Over the week, that's the weekly development, so I'm down 20 euros. All right, let's see. I think all of that is no big deal at this point, and yeah, we just keep on buying and see how it all develops. All right, so now it's Sunday, and I wanted to give you a little bit of a portfolio update. You saw that I was down a little bit when I made the trade on Friday. But what happened was that on Friday afternoon, the market turned around, and so now I'm actually in the win zone. And I'm up about 13 euros. So that's positive, right? Before we go any further, I just wanted to once go over this reconciliation of my portfolio and how much profit I actually made. Because you would think that I made 13 euros of profit, but actually I didn't, not quite. So I invested 2,000 euros, so far so clear, and I paid 2 euros in fees. And now my portfolio is at 2,013.74 euros. So far so clear. But if I look at my overall balance on the broker side, you see that my profit isn't 13.74, it's 12.33. Now, why is that? Well, the reason is, again, the fees. And the fees are factored into my price, and they increase my purchase price a little bit. So the important number here is the buy-in price. This is the price that is my execution price plus the fees that are spread over all the shares that I bought. So that's why my overall performance isn't that good. And the one thing that you need to see in order to reconcile is my cash available. Okay, so remember, I had more cash uploaded. I didn't upload exactly 2,000, I uploaded 2,100 so that I could always cover the trading fees and so on. So I have 98.59 available. And if I add that to my portfolio value, that's my total wealth, and that's at 2,112.33. And if I now compare this with what I transferred overall and look at the difference, it's 12.33, and that nicely reconciles with the number that the broker gives me here. So that's how it works. You always have to look at your cash balance and your portfolio value. Even if I say I want to buy 1,000, it doesn't buy exactly 1,000. Okay, so there's the fee, and then you only get fractional shares, but it's never fully precise. But yeah, at least from now on, we know that this is the number that we're looking at. Now let's look at how the market developed overall. I wanted to always give you a little bit of an update of how the market developed, how my portfolio developed, and I built a dashboard here, and we're gonna refine it over time, but it gives us a pretty good idea. So first of all, here we have an overview of the MSCI World ETF and the MSCI Emerging Markets ETF. And I'm investing in the Emerging Markets ETF in this series. And the emerging markets consists of all the markets that are not quite developed yet, whereas the MSCI World invests in the most developed markets in the world. And as you can see here, over the last week, the MSCI Emerging Markets outperformed the MSCI World. And actually, it did so over longer time horizons. So 1 month, 3 months, 6 months, and over the past year, the MSCI Emerging Market is actually up 32%. That's pretty astounding. And it's a bit of a break with historical patterns. Now, let's look at some of those markets that are included in the MSCI World and the MSCI Emerging Markets and see what drives the results. I have here an overview of stock indices for developed markets and for emerging markets. Here you have indices of countries that are part of the World ETF, which is the US, Japan, UK, Canada, Switzerland, Germany, and so on. And then you have in the emerging markets, our ETF, you have China, Taiwan, India, Brazil, and so on. Now, I couldn't find here, by the way, Korea in the dashboard. Okay, I don't know, but important, Korea is missing here. And it's also important to note that a country index is not the same as the stocks that are included in the ETF. Okay, so it's not exactly the same. We have certain stocks that are part of the, let's say, Shanghai Composite Stock Index, which are not part of the emerging markets ETF. And eventually I'm going to do a comparison of how this overlaps. And yeah, for the moment, it's just a rough indication that you see which countries are performing well and which are not performing so well. And yeah, if we look at the developed markets, we see that all in all, it looks pretty good. So the US is actually up, even though the NASDAQ or the tech stocks are down. So that means the non-tech stocks, if you will, of the S&P 500 actually supported the index so much that it ended up as a gain. All the other markets are up except for Australia, And partly they're also up quite significantly. So you see here, Switzerland is up quite a lot, France is up, and Ireland is up quite a lot. But most importantly, it's about what the US does. I think the US right now makes up 68% of the MSCI world. So it's totally overweight on US stocks, and mostly also because of those tech stocks, the Magnificent Seven. When I look at emerging markets, I see that China did well, Taiwan not so much, and then India, it seems like I don't have data here. And Brazil also did well. It's a little bit of a mixed picture, but overall it seems to, at least the stocks that were included in the MSCI emerging markets, they helped the index actually outperform the MSCI world. And you can see this here on the chart. We can look at, do we have a 5-day chart? No. We have a month to date. On the monthly basis, there's not much difference between the emerging markets and the world. But then as you go out quarter to date in 3 months, you see that the emerging markets ETF actually outperformed the world ETF, and quite significantly so. And I think it's especially, yeah, somewhere in March and then from April on that we saw that the emerging markets ETF is outperforming quite a lot, okay? Quite significantly so. And interestingly, this wasn't always the case. So here we have a 3-year comparison, and here we see that the world ETF or the world index is outperforming quite a bit here. And this gets even more stark, the contrast, when we look at longer time horizons, 5 years or 10 years, okay? So it's literally twice the performance on the world. But year to date, the emerging markets is really outperforming. Now, one last view that I have here is which stocks drove the index. So here we have the top 10 holdings of the MSCI emerging markets. I hope I got the right ones, because sometimes the listing is not the same, so you can have a stock that is listed in different places, and I hope I got the right one that MSCI also chooses. But yeah, those are the ones. We have here Taiwan Semiconductor, Tencent Holdings, Alibaba, and so on. So I think quite a mixed picture here, but I think what I would say is that the tech stocks were punished a little bit at least, which kind of corresponds to what the Nasdaq is doing. So Taiwan Semiconductor down, Alibaba and Samsung too. SK Hynix, I think they do semiconductors, and then PDD Holdings, I think they do e-commerce. Eventually I'm gonna deep dive into those companies and just explain what they do so that we know what we're buying. And others here we have a bank that's up, Reliance Industries. I think it's a conglomerate of all sorts of things, in China Construction Bank. So those are the top stocks here, and they are, not tech firms. All right, so much for this. This has been a first view at the indices, the holdings, and I'm gonna go into more detail as we move on this journey. So if you want to follow along and learn more, like and subscribe, and I see you in the next video.